Okay, everyone. It's 11:05 now. Thanks for joining. Thanks for taking time out of your busy day. Welcome to this week's second webinar. For those of you who joined us on Tuesday for our hyperscale market overview, thanks for joining us again. Today, we're going to talk about the hyperscale. We're going to try to extend the discussion into the data center infrastructure side and talk about this data center infrastructure and interconnection as part of the larger hyperscale value chain. So my name's Phil. I'm Phil Shih. I'm the founder and managing director for Structure Research. For those of you who don't know us, we are a Toronto-based research firm focused on the internet infrastructure ecosystem. Before we start, I'd just like to shout out and a thanks to Schneider Electric and Vertiv for being valued sponsors of this event. We hope to have many more of these in the near future. For those of you who notice the infra/structure logos on our pages, on our slides here, infrastructure is an annual executive summit that we hold in Toronto. This year, of course, we have moved to the online format because of the inability to host the live events. So we welcome you to join us in this online format, and we hope to see you in person soon, hopefully sooner than later. So let's get started here. When it comes to hyperscale, and I'm going to present the hyperscale cloud market share numbers that we did on Tuesday. So for those of you who were with us on Tuesday, sorry about the repeat. But when we talk about hyperscale cloud, who are we talking about? Well, we're talking about the logos right in front of you. So names that you well know. What we've done here is tier them a bit. The leader kind of triangle at the top, the middle, which is comprised of a lot of the hyperscale platforms coming out of APAC, China in particular, and then the enterprise-oriented clouds, Oracle and IBM. So the market share numbers that I'm going to present in the following slides are comprised of the revenue generated from these platforms, whether through our structure research estimates or from public disclosures. So we publish a quarterly update for the hyperscale cloud market. Our current update, as you can see here, shows our projection, a 5-year CAGR of 35%. And you can see the total aggregate market share estimates were obviously still through, not quite yet to an annual number for 2020, but it's tracking towards, as you'll see on the next slide, toward about close to $90 billion. Our 5-year, if things go as we think they will, on the current trajectory, we're looking at growth that will surpass $300 billion in 2024. In terms of the pace of that growth, I think everybody knows that this market is growing extremely fast, but the scale that is accumulating is starting to push the year-over-year growth numbers down. As you can see on the right on this slide, the numbers last year into this year, have dipped below the 40% mark. This is a market that's been growing 45 to 55% year over year, driven a lot in the early stages by Amazon, but now by a number of large hyperscale cloud platforms. And as you can see, going forward for the next 3 or 4 years, we think this level of growth will stay roughly in place. We think the scale has built to a point where you're not going to see the 40-50% year-over-year growth, but at the same time, we're not expecting it to drop off too far. This is a market that is very consistent and steady and predictable growth, and has a lot of, as we'll talk about, a lot of dynamics that are locked in. I want to quickly, just another point on these numbers, and if you're interested in the full report, please feel free to reach out to us. As I said, for subscribers, we publish this on a quarterly basis now, and to that, on a quarterly basis, you'll see where we've broken out the trajectory here over the last 6 quarters. I think what's interesting is that this, what this last quarter represented was the first 3 months of exposure to a full, let's call it, pandemic environment. The first quarter was maybe only partially exposed, and then lockdowns in large parts of the world started in the February-March timeframe, and so the impact of all that you started to see in the second quarter results. And you'll see, if you look to the middle chart towards the right, second quarter 2020, you'll see there's a reasonably big drop off with AWS and Azure in terms of the growth rate compared to the last 3 or 4 quarters. And I think that's meaningful. And I think that's significant. And we've been talking a lot about how much, how the pandemic environment is impacting. I think we'll talk a little bit later, but I think it's a combination of headwinds and tailwinds. And I think right now some of the headwinds are starting to have kind of dug into the numbers, and we'll see with this reporting period that comes, how that changes. But we anticipate a moderation in growth, but of course, underscoring the fact that 30% year over year on that size of a business, a $10 billion cloud business, is still very significant and does not show weakness in any way, but a slowing from previous growth rates. Growth is obviously driven by consumption, but it's also, and that consumption is moving across the world. This again is from that same report. Just to give you a sense of where these hyperscale clouds are expanding, it is definitely a global business. It has been for some time. We've highlighted here some of the bigger clouds and the ones most active in global expansion. I think some of the names here, just quickly to point out, Madrid you'll see in 3 of the boxes. That's a market that does not have much in the way of a hyperscale footprint today, but in the next 12 to 24 months, that will change quite dramatically. Poland, I think you'll see is mentioned there with Azure, with Google. And in all 4 boxes, you will also see mentions of builds happening in Middle Eastern markets. Now that's a very nascent region, but I think one that's also going to come onto the radar. So you should expect to see just more of a long tail of growth, just given that so many markets in the world have still yet to come onto the internet in a meaningful way. And when they do, there are many of them, of course, many of these organizations, many of the applications and content they consume will end up on a hyperscale cloud. So this is just a quick snapshot. You can just kind of take a step back and almost for an ecstatic effect, kind of see how these footprints look like on a map. You'll see that there are clusters around, obviously, the major metros and the largest clusters of populations, but the green representing new regions are starting to fill in some of the gaps that you'll see in this map. That was AWS. This is Azure. I think quick note, slightly different. You'll notice that there are probably a little more dense. AWS has chosen to build more in less places. Azure has taken somewhat of a different approach, building less in more places, and I think the dots on this map reflect that. Google's build out is very picked up the pace very much in the last little while, as they probably got into this market in a more meaningful way a little later. But as you'll see, they are building out and trying to fill up the gaps in their map as well. We have tracking of all those clouds, so just please reach out again. That same hyperscale cloud report. So today's session, different from Tuesday, we want to dig a little further into the value chain around hyperscale, what it's driving for infrastructure service providers, for data center operators, interconnection platforms, MSPs. We touched on Tuesday. Today we'll focus a little more on where which part of the infrastructure services ecosystem is getting a lot of this value. And as you can see from here, the wholesale data center is supporting a good chunk of this cloud footprint that we've showed you on these global maps. Many new organizations that are growing quickly, that are the future of the Fortune 100 or the Fortune 500. As you can see from some of the names like a Netflix, a Spotify, an Airbnb, and Uber, these are organizations that run everything. Their entire business is run on a cloud infrastructure platform, and those cloud infrastructure platforms for a large percentage of that footprint, in some cases 50%, in some cases 100%, will run on a hyperscale cloud, and that's the primary source of value generation from this ecosystem. That's the future. I think is heavily weighted towards hyperscale cloud consumption. But the existing, the current day, the Fortune 100, Fortune 500 or enterprises, large organizations that have been around for some time, are also making their way there. You've probably seen in the media some of these all-in bets, pretty high-profile announcements, and certainly those kinds of things are happening. But I think probably the more common, or maybe a more reflection of kind of the average pace of movement to hyperscale cloud is more of a two-step migration. I think you don't just make that jump overnight. In many cases, you'll see kind of a step towards a portion of kind of infrastructure moving to a private cloud, to an outsourced third-party environment, and then over time making its way to hyperscale cloud. But the larger point being that this migration, that this journey is a two-step process, a process that does take some time, but it is a source of more hyperscale cloud consumption, and in turn that will of course translate directly into more wholesale data center capacity requirements. So I want to drill quickly into some of the colocation market share numbers that we have. This is a quick snapshot. That's seven years worth of market share projections. As you can see, we've got the market growing, as a whole, and this includes all, retail colocation and wholesale colocation, at roughly a 5-year CAGR of about 9.9-10%. We have the market tracking towards 48 billion this year. Just FYI, we have a refresh on these numbers coming up in the next 4 to 6 weeks, and we'll be sharing that for those of you who are subscribers. But I think I would not expect, based on the current tracking we've been doing, and how, despite this very different environment, we do not foresee huge changes in some of these growth rates. We think that colocation in particular is held quite steady when you look at it on a global basis, and so we're going to see some adjustments, but we don't predict anything. We don't expect anything to be too different. If you take those numbers, and we want to drill into this part of the ecosystem that we're focusing on today here on this webinar, wholesale colocation, as you can see, is a faster growing part of the larger colocation sector. And if you drill into wholesale one step further, as you can see with the different hues of blue, the hyperscale portion versus the non-hyperscale wholesale portion are growing at quite drastically different rates. And as you can see there, just over 20% versus low single digits percent. Taken together, we're projecting wholesale colocation having roughly a 16% 5-year CAGR. But as you can see, the hyperscale portion of this is really what's moving the needle. And just looking at that differently on a percentage basis, you've seen the growth rates there and the total aggregate market share numbers, and this is what the percentage we're thinking that by 2024, this is over. Hyperscale would be more than 3/4 of the wholesale colocation market. So we're talking about the ecosystem and how the growth in hyperscale cloud is driving value for interconnection services and wholesale colocation services. The big question that drives that is, are these, is build versus lease? Are these hyperscale platforms, are they building their own data centers? And generally, that would lie outside this ecosystem, or are they leasing and working with third-party infrastructure service providers and being a part of this ecosystem and driving value? And as you can see here, it's different for each cloud provider, but there are certain patterns that are quite meaningful and tend to stand out. If you look to the lower left of this XY of this chart, you'll see platforms like Oracle and IBM and many of the platforms coming out of Asia tend to slant very heavily to leasing. IBM and Oracle, in building their cloud platforms, we've seen very few, if any, self-builds, and that may not be necessarily a big surprise, given they don't quite have the scale that some of the other platforms have, and as well, when you think about the clouds coming from Asia, from China, they when they're operating outside of that country, operating in new markets, there are a lot of challenges for them to pursue. So to pursue a self-build. So leasing tends to make a ton of sense, and that's generally the model. So you'll see that slanting over to, you'll see the trending towards very consistent and likelihood of leasing. Now, talking about the top group, of course, which is kind of the big elephants in the room, you'll see that they tend to be a little more selective, and each region that they enter or each market that they play in will have different dynamics that dictate whether they slant to leasing or building. And you'll see, as I mentioned before, entering new markets is sometimes a driver, and I think you'll see that Azure slants a bit. They've entered more markets in general, so leasing has been something that they have a proclivity to do. AWS has been in less markets, but they have scaled significantly in many of them, and we've seen patterns where they will enter, a market, get comfortable, they'll enter a market, they'll lease with a third-party data center operator, and then shift maybe to a self-build once they get familiar with the market, understand the supply chains, put personnel and staff on the ground, and then you'll see a combination of leasing and self-builds in the market, and that's generally what we see for this top three group in the future. Is a combination of that. But we still project leasing to be a very useful, sensible, and common, typical path towards building the data center, a data center to support hyperscale cloud infrastructure. The opportunity, I think, is clear to many who are on the call. You got many of you are deeply involved in this ecosystem or have a stake in it. Hyperscale is, I think you can guess from our comments, is growing quickly on a global basis, and just in the last year or two, we have seen new platforms out there put together to pursue this opportunity. Some of them backed by experienced operators who have already been in this space for a long time. And I think we placed some flags there just to give a sense for where these operators are targeting. And I think that hints at where this next wave is going to come from. I think you see 4 European Union, EU flags there. And I think that, based on our current tracking and the work we're doing in the marketplace and talking to these platforms, these operators and the hyperscale cloud platforms, Europe seems to be the center of that activity right now, and is likely to be the place where this next wave of growth happens. So definitely something to pay attention to. These platforms are obviously assembling, copious amounts of capital, large amounts of capital to support these builds, and in pursuit of the opportunity are, especially in this kind of environment, going after land banks aggressively, so that they have the runway to support the growth that they anticipate, not just to land hyperscale cloud, but also what's increasingly important, having the runway to grow with it over a long period of time. Excuse me. So with this growth, I think you'll see in certain national markets around the world, the growth is starting to mature and reach a point where, typically in these markets, there's one, the hyperscale platform will land in a single location. Sydney in Australia, for example, Tokyo being the obvious place in Japan, here where I am in Canada, Toronto. But you'll also see that the growth will start to, it'll start to pick up to the point where a second market is needed, not just to handle the capacity requirements, but also to provide the flexibility for different scenarios, such as backing up and redundancy, but as well as to just get closer to also other clusters of users where performance and latency is extremely important. These markets look really close together, but in the case, for example, of Toronto, Montreal, that's a very painful 6-hour drive that I've done many times. And Tokyo, Osaka is about a 3.5-hour train ride, and that's on a bullet train. And I think what's interesting, as well, is that we're seeing in markets around the world kind of a hub and spoke architecture develop, where there's the national market is centered around a primary market like a Paris, like a Madrid, like a Frankfurt, and then a secondary market, not necessarily a second hyperscale market, but maybe a edge dash hyperscale market, or a secondary market that's very dependent and integrated with the primary market. And so we describe this as a hub and spoke kind of architecture. Quickly, I'd point you to the bottom here, Frankfurt Munich, which I think is interesting because Microsoft just announced that they are building in Berlin, as well as expanding their platform in Frankfurt. And so you can kind of see how Munich also being a pretty a growing destination in that market. So you can kind of see how if you put Berlin there, that you'd have the hub and spoke, that wheel building out. I think in the middle, Paris, Marseille is probably one of the best examples of this dynamic, where the connectivity points out of Marseille tie that market into Paris. Paris obviously being the center of most of the hyperscale activity in that market, with Marseille, but Marseille having a small but a very strategically important footprint. And you can potentially see that dynamic play out in a place like Sydney, with Perth on the west, and the common kind of link between, say, a Paris, Marseille and a Sydney, Perth are the different, the geographic diversity. So kind of Paris to the north of France, and Marseille all the way down to the south, Australia, Sydney to the east, Perth to the west, but Marseille and Perth being right where subsea cable stations are. So that connectivity being extremely important, and that this is going to dictate a lot of where you're going to see hyperscale clouds set up their platforms, and of course, where the data center infrastructure and the underlying connectivity is going to have to land to support that. And so if this continues, which we believe it will, as this plays out, you should expect the different increments of hyperscale. Now, certain markets around the world are just having smaller user populations, larger user populations, and so the requirements in these data centers are going to differ. But at the same time, we think that with this hub and spoke dynamic in certain somewhat small to mid markets around the world, you'll see a smaller category of hyperscale emerge. Let's say 2 to 5 megawatt deployments rather than say 10 to 40 in some of the larger where some of the larger regions live. And this is I think going to kind of diversify the market and create different types of opportunities for those involved in the infrastructure services ecosystem. So move a little towards kind of take a big picture look at what's happening in the co-location space. I think the separation in the market started as I think the kind of taking off point, the kicking off of this separation started with the wholesale game. And so you saw co-location start as kind of a bread and butter business start to shift towards those focused on wholesale and those focused on retail. Wholesale quickly became a hyperscale game, and then retail started to split between, again, kind of more plain and vanilla, and then a more interconnection focused type of retail co-location offering, and then the new wrinkle towards the right of this chart, the edge data center. So whether that be a micro data center or a data center in further out towards other clusters of end users in a secondary market, very much still looking like a typical traditional data center, but serving users out at the edge. And so this is just another way of kind of digging into how the retail sector has started to change over time. Space and power, a little more orientation towards interconnection, towards the edge. Different scenarios now are being used. And this is kind of a forward-looking chart, just trying to simplify all that and articulate where we think things are going. And then we think there are going to be distinct tiers that they're in the data center space, driven by what's going on as more workloads move to hyperscale cloud. The hyperscale data center, interconnection-oriented data centers, and then edge data centers, which we think will likely split between those that still, as I mentioned, look as more typical or standard, and those that get really further out there or get deeper and closer to end users, but are smaller rather than looking like typical traditional data centers. Now, the other part of the ecosystem I wanted to touch on, which I think is obviously extremely important, as we focused on the underlying real estate, the data centers that house all these cloud platforms, and that's been expanding and growing across the world. But connections to those clouds are also important and expanding around the world into many of the same locations. And so you'll see, that growth of interconnection is a big piece of the puzzle, because it's driving what's going on with users that sit in these data centers with these interconnection fabrics and the ability to connect to not just other networks and other business partners, but of course on-ramping to these cloud platforms. And so I touched on how this edge hyperscale, or a somewhat smaller hyperscale increment, is going to emerge in certain markets around the world. We would argue that you will also see this on single campuses. So what Equinix is doing with the xScale platform is a pretty good indicator of where this is going. So you'll have a data center that has a density of networks that drives a lot of interconnection traffic, and then you'll have rather than connecting to a large cloud region that might sit in the suburbs or in a nearby metro, on that single campus, you'll see kind of smaller increments of hyperscale cloud sitting literally across the street, and then customers choosing to go and set up their infrastructure in that data center, perhaps typically in a traditional colocation environment, and then being able to interconnect to the hyperscale platform that is on the same campus, and of course will deliver very optimal and very attractive levels of performance. And that idea can extend to multi-cloud scenarios. I think this is last year Oracle and Microsoft set up a interoperability agreement, and this was so that you could perhaps run your database on Oracle, but connect to a Microsoft Azure's cloud and use some of their AI and machine learning tools, which are far more developed at this time. And so because of that interoperability strategy, that cooperation between these two platforms, they are increasingly building on, in a similar way, identifying a campus and both having nodes on that campus, so that if you're going to interoperate, obviously latency has to be extremely low and extremely and so the way to do that, of course, is to get closer to each other. So we're starting to see this scenario as well, and this is, of course, creates an opportunity for campus style campus style environments where you can basically double down and attract two platforms at the same time. So we're just about thanks for sitting through all this, and we're getting to the end of the presentation. I just wanted to, I think it's kind of the topic you just can't avoid these days, but the pandemic. I hope I give you a good sense of what we think is happening right now. There obviously, with many things in life, and of course with technology and infrastructure, there are certain things that are creating headwinds for the sector, and there's certain things that are creating tailwinds. You saw what happened with hyperscale cloud. It tended to tail off a little bit. I think while there was a lot of growth coming out of things like, obviously with Netflix from working at home, if Zoom is running on Oracle Cloud and sitting in Equinix data centers, their bills are going to increase with those operators. You're seeing that dynamic, but you're also seeing it offset a bit with just some of the weakness in the larger macroeconomic environment. And so it's not quite perfectly offset, as you can see from those numbers, but there is, a certain amount of offsetting going on at right now. It seems like some of the weaker vertical exposure has been hitting these platforms. So you can see, I think most of this is pretty clear to many of you. There's been no shortage of commentary and discussion on the pandemic environment. But I think the thing to highlight is that, despite that there are going to be ups and downs now and probably over the next few years, but the trajectory, the overall trajectory, is steady throughout the hyperscale value chain. Is one of the stronger pieces of the technology sector. Everything that we have seen shows that it's business as usual. Investor interest remains strong. The validation of the model is perhaps arguably even more validated in this environment. And I think that you will continue to see the ecosystem go after this opportunity. As I mentioned, there continues to be aggressive search for opportunities, land banking, the sale leaseback. We would argue in this environment is even more compelling for operators as enterprises look for ways to downsize, optimize, get more efficient. And on the operating side, I think you're definitely going to see more kind of more consumption, just that kind of people playing it a bit safer given the unpredictability, the inability to travel, the difficulty of access. You're seeing operators accelerate, advance their supply chains, but you're also seeing hyperscale clouds accelerate consumption, given they want to lock in and have a predictable runway, given the uncertainty in the environment. So all of these things, I think, taken together, create an incredible opportunity for the larger sector. I think the last thing to think about before we move to some questions, which I think we have time for, is just it's interesting, I think, and especially this year, how kind of the politics has almost become a factor that drives where clouds can operate, and in turn where they're going to set up their data center infrastructure. That's what everybody on this call cares about. And so that I think this will be something to pay attention to. TikTok and the whole kind of saga with that, and apparently looking like Oracle will be a beneficiary of that, is something probably none of us could have predicted. But it is something that can happen. And in last year, I think with Brexit, another geopolitical development that has direct impact on the sector. So yeah, I would say that's something to pay attention to, and probably if you're trying to stay away from the news, it's going to be difficult with the melding of the world of politics and technology and society and business. So that's my contact information. I'm going to try to figure out the Q&A app here, and hopefully Jabez who's been listening in can give me a hand here.
Yeah, Phil, I'm here.
All right, there you go.
So we've got a bunch of questions, and we'll try to get through as many as soon as possible. Our first question, I think, comes from Jeff Hardy. So Phil, what is the biggest challenge to the growth of hyperscale data centers, in your opinion, is the question.
The greatest challenge. So I'm gonna, sorry, can you just repeat the second half again?
What is the biggest challenge to the growth of hyperscale data centers?
So the data, I'm going to assume that question is more to the data center piece. Yeah, absolutely. I mean, I think it's capital. Obviously, I think that these, just because the builds are getting so much bigger, it is such a task to put together the capital required, and then not just to build, but also to assemble a team to do that, and as well as operate. It's getting even more difficult these days, I think, given the global nature of the business. So I think that's a challenge, identifying and being able to participate in multiple markets. I think is something to consider as well as the fact, I think the other real challenge facing data center operators is when you're talking about at least this part of the hyperscale value chain, you are talking about a very limited target market of companies. So being able to sell into those platforms, having relationships is critical, and not everybody has them. I think, as many of you on this call know, the hyperscale buying universe, or at least those people, are very elusive, and so that can be outside of just assembling the capital and the expertise, the experience, the know-how, and finding the markets to do this in. There's pursuit and closing of the customer.
Yeah, that's a great point. And I also add, Jeff, that because hyperscale data centers take up a lot of land and consume a lot of power, so one of the challenges, especially in more land constrained markets like Singapore and Hong Kong, is that, and even Amsterdam, there's been moratorium in places in some of these markets that have, put a pauses on data center hyperscale data center development, just because governments have to evaluate the amount of power they're allocating to these data centers versus to other segments of the nation's economy. So that's, I think, it may not be the biggest challenge, but it's a challenge to growth as more and more governments get smarter on the data center infrastructure space and how they view it in terms of strategic importance to the country's overall value proposition, given that takes up a lot of land, takes up a lot of power, may give you a lot of construction jobs in the beginning, but once the data center is up and running, doesn't employ a lot of people to maintain and operate it moving forward. So that's, I think, something that people are looking at right now. So yeah, next question comes from Frank Stiff. He asks, is there any sense for how much of either hyperscale or wholesale demand is coming from existing workloads migrating out of corporate facilities?
Hey, Frank, good to hear from you. Yeah, I don't know if I'd have an exact data point to share with you. I think you've come to many of our other presentations, and we've talked about at least the overall where we are kind of data point where we are in this game, being roughly, say, 25-30% on premise and 70% still to go. And I've argued that moves like 1 or 2% a year. And in this kind of environment, I always, I think similar to 08-09, I think it's going to perhaps push that further or faster. So yeah, I mean, I kind of roughly work off that 70-30, 65-35 where we are now when it comes to enterprise workloads. And we're getting, and I would say, my additional comment would be that slants a bit more to that comment would slant more to larger organizations. As you move down in size of organization, that number pushes, the more outsourcing there will be. So the workload percentage would be closer to 50, if not 60. And then, of course, startups, small organizations, SaaS providers, and of course, these next generation companies like Netflix, who are definitely not small, are 100% running on cloud.
Great. And yeah, we had kind of a connectivity question from both Jeff and Joshua that I think are pretty related. So it's around, do we see global connectivity services pushing edge or centralized growth? And another way Joshua asked it is, with more optical fiber cable systems, or he mentioned the Arctic cable system, or just submarine cable systems in general, connecting Asia and Europe, or other regions together in the future. How does that change the way future hyperscale deployments are going to be distributed geographically, in your opinion?
Yeah, maybe I'll try that. Maybe Jabez, you can jump in if you have anything to add. I mean, I think it's going to dictate a lot of where infrastructure goes. I mean, I mentioned in this in my presentation, what's happened around Paris and Marseille, with Paris being basically in Central Europe. If you connect down to Marseille, you can get over. I'm not quite certain what that water body is. The Mediterranean, I think, over to North Africa and to the Middle East, and close out to Asia. The same thing with I mentioned Sydney and Perth. The landing station in Perth. That cable connects through directly over to Indonesia, where there's a large market in Jakarta. Those are just two snapshots. There are cables in the west of France connecting over to the east coast of North America. You can expect connectivity. I don't have them in front of me, but there should be cables running from Southern Europe to Latin America, where there's affinity and close relations between Spanish and Portuguese speaking populations. I think you'll see this around the world, and you've seen companies like Digital Realty Interaction acquire some of these points of presence because they've done this because they anticipate that that's where those are going to be strategic points where clusters of infrastructure and then edge hyperscale and then hyperscale deployments will end up being. So Jabez, I don't know if you had anything to add.
Yeah, those are all great points. And I think it nails the theme that we've been talking about a lot internally as a research firm about decentralization of hyperscale, which is, they need to fill more gaps on the map for performance, latency purposes, but also from a regulatory standpoint for data sovereignty, data privacy reasons, and all these submarine cables that are being built to connect more regions to other regions so as to disaggregate the concentration of connectivity in a single market or single region where, for Asia Pacific, for example, a lot of the submarine cable concentration has been aggregating markets like Tokyo, Singapore, Hong Kong. And so you start to see more submarine cables help, come into play to decentralize some of that architecture. And I think that'll be a good thing for more distributed hyperscale deployments globally. I think maybe let's wrap it up with one last question. Joshua had another question on would the presence of national internet exchanges change the way hyperscalers and edge deployments look at site selection? I think it's pretty related to what we just talked about, but maybe Phil, if you had anything to add on how edge may be impacted by more in-country IXs.
Yeah, I'm not quite sure how to tackle that one, but I think similar to the comments we just made, I think that these.
Oh, I think Phil may have froze.
We've seen this in the U.S. in certain markets where edge deployments they're trying to move out into areas where there are emerging clusters of users, and edge data centers are kind of setting up or taking over internet exchange points or ecosystems of where there are network density in those markets and building around them. So I think that's what you should expect to see. Similar to the subsea cable dynamic is that as infrastructure builds out to the edge, the providers are going to look for wherever there's network density, and I think that they, it just makes sense for them to build in that way, and that's kind of how this will play out. Wherever there's connectivity, you should expect some form of infrastructure, whether it be that looks a little more like hyperscale or looks a bit more like edge, and that's why we kind of make the argument that there's going to be edge dash hyperscale and hyperscale. There's going to be some separation as the edge becomes a little more real.
Yeah, and I was going to end the Q&A right there and then, but Timothy Young snuck in a really good question on that I think is worth addressing. So he asked, what is your view on the public US data center operator landscape in terms of who do you view as the winners and losers, and how should these operators position themselves given the increased competition among investors like infrastructure funds and private operators?
Yeah, it's a great question. I would say
Phil, you're cutting out again.
This
there we go.
Sorry, this peer group has done quite well overall, give or take a few that might lay outside, but they we were pretty optimistic about where this peer group is going, and that's, of course, much of it is driven by some of the drivers, just the trend toward outsourcing. I would say that we are entering a period where the value proposition of this group is going to do, I think, gain a higher profile. I've often commented how 0809, this in many ways, this time that we're in now is a repeat of some of that, just with the market being a bit more or quite a bit more mature, but still flies under the radar as much of infrastructure does, and so I think that there's going to be a much greater understanding of the value proposition. So I think the peer group will continue to do well. In terms of how do you pick winners and losers? How do you what should they do given the increased competition, the intensity of competition in the landscape? I think it's to do to focus and do what you do really well. And so I'll bring up an example. I think QTS a few years back decided to get out of the they had basically a managed hosting business that they had acquired, and it just didn't fit in the model anymore. they decided to focus in on hyperscale opportunity, on the interconnection that enables that, and to take care of their co-location base by driving value out of it. And I think, and you're seeing that now, with Equinix and Digital, very much different businesses, but very much driving that interconnection conversation, trying to make that the core, or making that the core of their business and the way they position in the market. And so I think that's, as this market continues to grow, I think focusing, getting that scale, and I think scale, by doing something really well is how you get scale, and scale translates to obviously margin and profitability. And that's, where I would say, if you get too spread out, this is not the time in this market to be doing too many things at once. I think do it to do well, scale it, whether it be in a select group of markets, or if you can do it like some of the platforms around the world.
Yeah, and Timothy, I don't think it's really as kind of black and white as who are going to be the winners and who are going to be the losers in this space. I think the way we think about it is who's going to win a lot, who's going to win kind of moderately, and who's going to maybe win a little bit, still win, but not win as much as the other guys, because of the macro trends and the secular trends that are driving growth in the marketplace. Like if you're a data center operator and you're not doing as well as, let's say, these globally scaled US publicly traded data center operators, you're going to be acquired for a decent premium by infrastructure funds, private equity, sovereign wealth funds that are really hungry to put capital in space. So I think, what you're going to see is that even though there will be, globally scaled data center operators are obviously front runners in capturing the opportunity, given their distributed footprint and ability to cater to multi-region, multi-market requirements. And then you have regional operators that are also kind of focusing on the hyperscale opportunity, and you have some interconnection-oriented retail colocation providers as well that are trying to build that, that version 2 of Equinix in regional specific areas. So there's different types of separations in the data center market, and I think because there's such a big shift towards digital assets and digital infrastructure from physical assets, that I think it's going to lift all boats. And if you're not winning as much, you may be consolidated or acquired. And so I think that's kind of the way we view the marketplace moving forward. Yeah, so I think maybe I think that's a good set of Q&A that we went through. Again, for the attendees that stuck around to the very end, really appreciate you guys taking the time to attend this webinar. Again, we'll have this webinar posted on our YouTube channel, so please, if you have time, subscribe to our YouTube channel for the latest updates and the latest videos on there. I'll hand off to Phil for any closing comments, and then we'll conclude this.
Yeah, thanks for joining us. I think some of you are dialing in from different time zones, so good morning, good afternoon, good night. And so for the familiar names, I'm only now looking at the participants, but familiar names, hey, good to see you guys. I'll hope to see you soon in person. Take care. Bye now.